Most people think they understand the crypto market until they realize they've been watching the wrong numbers. They chase prices, not data. They trade emotion, not information. And that's exactly why they miss the quiet moments, the ones where math and timing line up before the crowd even notices. Right now, 3,000 XRP sits in that moment. It's a number small enough to ignore, yet big enough to change everything once reality catches up. Because the truth is simple. The math behind Ripple's ecosystem doesn't lie. The adoption curve, the liquidity volume, the global settlement market, they all point to the same direction. Welcome back to Crypto Equation, where we strip away the noise and talk about what the numbers actually say. Not the headlines, not the hype, just the facts that most people overlook. To understand why 3,000 XRP could shock everyone, we need to look beyond today's price. Price is just a snapshot. Value is the film. And that film is still rolling quietly in the background of global finance. Start with the basics. Ripple built XRP to be a utility asset, not a speculative meme. Its purpose? Move money across borders as fast as data moves across the internet. While most tokens chase hype cycles, XRP has spent years solving trillion-dollar problems. Settlement delays, trapped liquidity, and cross-currency friction that cost banks billions annually. Those numbers matter. The global payments market handles over $150 trillion a year. Even a fraction of 1% flowing through Ripple's rails represents billions in daily transactions. If XRP powers those settlements, even partially, demand must rise to match the liquidity required. Now compare that to supply, 100 billion XRP total, roughly half in circulation. When utility scales, available float tightens. That's not speculation, that's arithmetic. But let's keep it realistic. Nobody is promising $10,000 coins overnight. This is about compounding adoption, not fantasies. Let's imagine RippleNet captures just 0.5% of global settlement flows. At that scale, daily usage would need billions of XRP in circulation. If institutional holders and payment corridors lock up supply for operations, public availability shrinks. When the market realizes that imbalance, repricing becomes inevitable. That's what most people don't see. They're watching volatility instead of volume. They're counting candles instead of corridors. You might wonder, if the numbers are this obvious, why doesn't everyone see it? Because numbers don't shout, they whisper. And it takes conviction to listen before everyone else. Most investors wait for confirmation from mainstream news, but by the time headlines arrive, the math has already done its work. It's the same pattern every time. Early data looks boring, growth looks slow, then suddenly it all connects. And what looked impossible becomes inevitable. 3,000 XRP is the threshold where everyday investors can still participate before institutional liquidity absorbs the market. It's not a moonshot target. It's a strategic position based on probability. Let's connect the dots with hard data. According to Ripple's quarterly reports, on-demand liquidity volume keeps doubling year over year. Dozens of payment providers now move funds across corridors in Asia Pacific, Europe, and Latin America using XRP behind the scenes. Ripple has also expanded into tokenized asset markets, targeting real-world value on-chain, a sector projected to hit $16 trillion by 2030 per Boston Consulting Group. If XRP remains the neutral settlement asset for that infrastructure, liquidity requirements multiply again. Add ISO 20022, the universal language of modern finance, going fully live. Ripple's network has been compliant since day one. Every major bank migrating to that standard now speaks Ripple's language by default. Put simply, the rails are being rebuilt, and XRP already fits the gauge. The psychology is just as important as the math. Every major wealth transfer starts with disbelief. When the internet arrived, people dismissed it as a fad. When smartphones appeared, critics said no one needed a computer in their pocket. Now we can't imagine life without them. XRP sits in that same disbelief phase. Skeptics call it slow or outdated. Believers quietly accumulate. Eventually, the metrics overpower the narrative. That's the moment when crazy turns into obvious. Owning 3,000 XRP before that shift isn't speculation, it's positioning. You're aligning yourself with inevitability while it's still affordable. Every cycle looks the same from the inside. In the beginning, nobody cares. Then adoption starts slowly. The charts move sideways, and everyone loses interest. But underneath, something structural keeps building. Partnerships, regulation, integration. Until one day, the market realizes it's standing on a completely different foundation. That's when everything reprices, fast. That's what shock really means. It's not a surprise to those who studied the numbers. It's just timing catching up to mathematics. Right now, those numbers point to a global system that's quietly being rewired. Banks, fintechs, and payment firms all face the same issue. Capital locked in nostro accounts, slow settlement, high fees. Ripple's on-demand liquidity solution cuts those costs by 50% or more. That's not marketing, that's a business case. When companies save money, they scale adoption. Multiply that across an entire industry, and XRP's utility becomes self-reinforcing. Each corridor adds volume, each transaction adds data, each partner adds credibility. But here's the part the headlines never tell you. These integrations don't happen overnight. They happen quietly, under NDAS, through months of compliance testing and pilot programs. By the time the press release drops, the rails are already live. That's why retail investors always seem late. They're waiting for an announcement that's already priced in. Owning 3,000 XRP now means you're not waiting for permission. You're trusting the process of infrastructure adoption, not the noise of speculation. That's how long-term investors think, and that's exactly why they win. Let's put the math in perspective. If XRP reached even $10, that's a $30,000 position from a modest stake. At $50, it's $150,000. At $100, it's $300,000. No one can guarantee those numbers, but they show how leverage works when utility compounds. The higher the volume Ripple processes, the more liquidity XRP must handle, and liquidity has to be priced efficiently. This is how value migration happens, slowly, then suddenly. And when that suddenly hits, the majority will call it luck. But luck is just math plus patience. The reason this opportunity still exists is because most investors misunderstand time. They think patience means waiting. It actually means preparing. Holding 3,000 XRP isn't about hoping. It's about giving the system time to mature. You're aligning with an inevitable upgrade, and upgrades always start small. The technology is here, the compliance rails are ready, and regulators are finally catching up. The US court decision that declared XRP not a security was a turning point. Since then, liquidity providers have returned, exchanges have relisted, and Ripple has re-entered new markets. Momentum is building quietly, just like it always does before things break wide open. Dash. Ask yourself this: when the financial reset finishes, when cross-border money moves instantly and cheaply, which assets will be part of that flow? It won't be speculative tokens with no real-world purpose. It'll be the assets that make the system work. That's the role XRP was designed for. So when the world finally realizes that 3-second settlement isn't a dream but a necessity, the revaluation won't be emotional. It'll be mechanical. That's why the numbers don't lie. Every new corridor, every cost reduction, every efficiency gain pushes the math further in XRP's favor. The next few years will separate those who saw data from those who followed drama. The ones who studied liquidity metrics, adoption rates, and transaction volume will already be positioned. The rest will wonder how they missed it. And that's the real shock. Not that XRP succeeded, but that the evidence was visible the whole time. You just had to look past the noise. 3,000 XRP might not sound like much now, but in a maturing digital asset economy, small early stakes often become defining positions. That's how markets reward foresight. So remember this when doubt creeps in. You don't need to predict the future. You only need to recognize patterns. Utility always wins. Technology that saves money always wins. And investors who align with that truth early always win. Keep your perspective steady. Look at the numbers, because when they add up fast. And by the time everyone notices, the opportunity will have moved on. This is Crypto Equation, helping you see what's real before the rest of the market catches on. Stay informed, stay patient, and I'll see you in the next one.